Hello and welcome to another episode of Autocar Professional Dialogue. Today we have with us Mr. Sunjay Kapur, the President of ACMA. Mr. Kapur, thank you so much for sparing out the time and for talking to us.
Thank you, Mayank.
We are seeing right now the situation around the world, especially the war between Russia and Ukraine, having its impact on the global supply chain. And, when we talk about the automotive industry, so what are the threats that you're seeing right now and going forward in the future, in the near term? Is it going to be a lot of disruption that is going to unfold?
Mayank, you're absolutely right in terms of disruption in the industry that exists already. Disruption exists in different forms in terms of technology, in the forms of production, in the forms of production cycles, the flexibility that's required today to cater to the different kind of demands that we have in the industry. The conflict is definitely a situation which is of concern from a supply side. We've seen a lot of neon gas is made in Ukraine, palladium and nickel out of Russia. So the raw material prices could see an escalation. We could see some shortages in terms of supply for supply chain. Currently, I'm given to understand that the neon gas requirement that the semiconductor uses is already in place at this point in time. However, if that were to run out, we could see some disruption in supply chain. The fortunate thing is that we've got strong demand. And I'm saying this not just from India, but across the globe, we've got strong demand. So the opportunity for the domestic as well as the export, as far opportunities for the component industry exist. We're really now facing supply chain challenges. And, we're an industry that's very resilient. We've overcome challenges before, and I'm certain that we'll be able to overcome these challenges.
You mentioned about neon, being a supply constraint at this point in time, but there's also concern about these precious metals coming from Russia. We are seeing concerns regarding nickel, palladium, and platinum, which are like key materials going into both EVs. If you talk about nickel, it goes into these lithium-ion batteries, and then if you talk about platinum, palladium, they're going into the catcons of the ICE cars. So is there a disruption already in that space, and are companies or are tier 3, tier 4 vendors already looking at alternate sources?
So currently we haven't seen any major disruption, and therefore we haven't seen any major schedule changes, and I'm talking about out of the ordinary schedule changes. So we are, it's a wait and watch situation. I'm not an expert on terms of conflicts and geopolitical movements and how this will impact the near to long term geopolitical situation. However, we're hopeful that this conflict is resolved sooner than later, and we can go back to normal, because again, like I said, what's phenomenal is the demand. Right. Today we're not worried about demand creation, we're more worried about supply. And it's a good problem to have, because the demand exists. However, if this problem gets dragged on for longer, we'll see more challenges in the industry. However, again, like I said, as long as demand exists and we can meet that demand, we're in a good position.
Mr. Kapur, you're stressing upon demand, but in reality, when we look at the numbers, we are seeing the numbers of a lot of different segments in the industry in India. If you look at the passenger vehicle segment, if you look at the two-wheeler segment especially, there's a continued degrowth which is happening over the last few months or even quarters. So, at this point in time, is there a risk of stagflation that is there, that is looming large in the ecosystem?
So when you look at inflation from a raw material perspective, yes, there is, and we've seen that happen. If you look at the first half of the year, the component industry grew in the domestic market by 65%, and we grew exports by 76%. So we've definitely seen growth there, and this growth is coming on the back of strong demand. We've been through a difficult period in the commercial vehicle segment pre-pandemic as well as in the pandemic, and now we've seen an uptake in the commercial vehicle segment, which is definitely a positive. When you look at the component industry, we also have the opportunity to supply globally.
Right.
So when we look at our industry, we can confidently say that there is growth. Again, the demand exists not just in India but globally. We had a 25% increase in aftermarket products based on the first half year. Like I said, 65% domestic and 76% export. We had a trade surplus because we had a 71% increase only in imports. So again, I'm not so concerned about the demand side of things. Whilst we may have questions in terms of what the real demand is because supply doesn't exist. From what we're seeing, across the globe, is that the demand is there. It just happens to we have supply challenges that we need to overcome.
Right. And you mentioned about that we've also grown our exports. The component industry has grown the exports in the recent past. From the government's point of view, we are seeing this PLI scheme being rolled out, and just a few days back, the government has actually announced the name of the players who have been given the approval for getting these incentives. So, if you look at the scheme in particular, is this a direction or a hint from the government side for the industry to develop products which are successful or which are targeted towards the local market in India? Or is it like a hint to develop products which can go global as well?
Okay. So the PLI scheme was announced yesterday. 75 companies are on the list for the PLI scheme. The government is very, very clear in their mandate that we must invest in future technologies, and the aim is to invest in future technologies, A, for exports, and B, for deep localization. We as an industry would like to reduce our dependence on imports. We would like to be a net exporter, and for that reason, we will continue to invest heavily in terms of localization, as well as leverage the opportunity for exports. The PLI scheme requires companies to invest 250 crores as a minimum investment over the next 5 years. And if you multiply that by the 75 companies, you're looking at close to 20,000 crore investment, which will again bring about employment as well. So we're sitting on a very good position. We're very thankful to the government for all the support that they have given the industry. At ACMA and the Ministry of Heavy Industries works very well together, very closely. We're grateful to them for bringing out the PLI scheme. It's very timely. A lot of excitement about the PLI scheme. And a lot of encouragement to invest in future technologies. And that's really where we're headed as an industry. And this is just, adding to that. We're anyway looking at a very disruptive market space. When you look at disruption, we take CASE, which is connectivity, autonomous, electrified, and shared mobility or smart mobility. And shared becomes a subset of smart mobility because there's so many more business opportunities that are coming with the disruption in the industry, whether they be in terms of connected vehicles, in terms of smart vehicles and data analytics, or telematics. Autonomous level 1, 2, and 3 is very easily achievable. You shouldn't look at autonomous only as driverless. That's level 5, but other levels of autonomous are achievable. And I think, with all the encouragement for us to look at future technologies, this also doesn't limit us just to electric vehicles, but just investing in technologies. And that's really a great driver for growth within our industry and puts us in a very strong position.
So then, are you optimistic about Indian component manufacturers eyeing that global scale over the next few years? And if so, then what is going to be their approach towards it? Because for a lot of time, for so long, most of the players, they have gone through the JV route, or maybe technical collaborations with players who are established overseas. So going forward, do you see that continuing, or do you see that companies who are like indigenous companies going forward and developing these new technologies?
So I feel that I am very optimistic about the industry and about what comes next in terms of all the investments we're putting towards future technology. You're absolutely right in terms of we started our lives with joint ventures. A lot of companies have adopted and adapted technology from the joint ventures and licensing agreements. And those companies will only invest more, I hope, in terms of technologies and build their own technologies in India. We've moved from a build to print to design, right from black box, and we're designing for global companies in India. So the component industry is very mature and is headed in that direction. So I feel more companies with this encouragement by the government, with the benefits of the PLI scheme, etc., will start investing in technology, homegrown technology, and if not licensed technology. The opportunity to bring in technology and joint ventures now lies in the tier 2 and tier 3 space, because they're also going to have to ramp up, because at the end of the day, the industry is extremely complex, and we need to go grow with our tier 2 and tier 3 suppliers. So, we're hoping for more technology or increase in investment in technology as well as capital expenditure along with that.
So does that capex go towards more R&D, more indigenous R&D as well, and also towards automation? Because right now, it's if you want to target the global market, I think is that also a prerequisite for that?
So there are multiple aspects here. One is automation, then you've got sustainability.
Right.
We've got a great push from the Prime Minister at the COP26 summit in Glasgow, talking about a five-prong approach towards sustainability. Today, investors and in banks, everything look at companies from an ESG perspective. So I feel we're headed in that direction. There's going to be a lot of automation, Industry 4.0 implementation. We've already doing it. We've been doing it for years in terms of Kaizens, which is continuous improvement, and just digitizing all that makes it smart. And with the advent of what happened in the pandemic, where we so quickly digitized, I feel this will only increase, and companies are going to invest more in smart manufacturing, if you want to call it, and across the supply chain, not just in the tier 1 space. So there's going to be capital expenditure in terms of R&D. There's also going to be capital expenditure in terms of capacity enhancement. We've seen the commercial vehicle space come back, and we're going to have to put up capacity for increased numbers. So it's going to be a mix of both, and hopefully we'll see great growth as long as we don't see supply chain challenges.
Right. Coming back to a little bit on demand, we're also seeing fuel prices sort of in a state where they're rising continuously at this point. Also, it's one of the the after effects of the war that is happening. So, do you see that also impacting the demand going forward?
I feel that it could impact demand. There's no doubt about it. Let's see how this plays out. Let's see. We're hearing all kinds of different conversations about buying oil from Russia and etc. So let's see how this plays out, and let's see what happens with fuel prices as we go forward, and then we'll be able to judge the situation in a more informed manner.
What would be your opinion about India, accepting Russia's offer to buy oil at this point?
I can't have an opinion on that. That's really a government-to-government conversation, which I'm not an expert on.
Right. Final question, Mr. Kapur. So, you mentioned about, the component industry achieving growth in the first half of this fiscal. We're almost at the fag end of this fiscal. So, what is your, outlook of this? And also now going forward, when you step into FY 2023, how do you see the next fiscal?
So I think, given the OEMs and given the numbers that we're discussing, if we were to meet those numbers, because of, again, supply chain challenges, we'll be able to meet, the growth targets that we're hoping to meet. We'll have to see, again, it all boils down to supply. So, we're confident of demand, it just boils down to supply.
Right. And what about the next fiscal?
Same thing.
Right. Thank you so much for your time.
Thank you.
Thank you. Pleasure.
Thank you.